Good morning, ladies and gentlemen. I'm Joseph Novichkov, Senior Analyst at GDMFX with the morning outlook for the company. Starting with Asia, all Asian currencies headed for their biggest weekly decline in almost 6 months as an improving U.S. economy spurred speculation the Federal Reserve would bring forward its timetable to rise interest rates. Fed officials reviewed policy. Actually, they are going to review the policy September 16-17 next week after reports this week showed U.S. jobs opening held close to 13-year high in July, and consumer credit growth exceeded economists' estimates. Now, an increase in interest rates in the world's largest economy will reduce the lure for higher yield emerging market assets. On another hand, let's take a look at the US dollar. It's heading for its biggest weekly gain in 10 months against major peers, with US data today predicted to show strengthening retail sales coming out at 12:30 GMT. A little more about the dollar. It was a little changed this morning at 1.2925 per euro after weakening earlier as much as 0.3%. The US currency gained on September 9 to 1.2860. Now, the strongest since July 2013. It rose also 0.2% today to 107.11 yen, and of course reached 107.20, the highest since September 2008. The UK currency, the pound, gained 0.3% to 1.6255 after reaching 0.7% in the past 2 days. The UK currency slid to as low as 1.6055 on yesterday's trading, the least since November. In Europe, the efforts to boost lending and reduce financial fragmentation won't succeed unless banks can move money freely between countries. That's what the European Central Bank policymakers said this week. Taking a brief glance at the commodity sector, where major commodities, we're looking at gold. It dropped to a 7-month low, sinking to the lowest since January, as speculation that U.S. borrowing costs will rise sooner than expected. And of course, strengthening the dollar, it's eroding demand for precious metals as an alternative investment. However, it was followed by 100% retracement of yesterday's decline, and right now is traded close to 1240 level. Oil, West Texas Intermediate, headed for a second weekly drop on signs that crude supplies will continue to rise even as global demand weakened. However, Organization of Petroleum Exporting Countries expect it will need to pump an average of 29.2 million barrels a day of crude next year, 200,000 a day less than the forecasted a month ago. Now, witnessing in the monthly market, that was a report since September 10. Now, this will boost estimates for supplies from countries outside the OPEC by the same amount. Oil, of course, is back above the level of $93 per barrel. Right now is traded close to $93.40. That was after we saw the Chinese new loans climbed earlier into the action session. That's all from me from today. Stay tuned. Thanks a lot for watching. Bye-bye.